Good morning, everyone. This is Daily Trade Analysis with the market forecast for today, 1st of November. We are starting the month and continuing the week on Tuesday today. So yesterday we had a range day sideways consolidation, and during the overnight we are quite long and notice this previous pre-market pivot that is now pushing the price action up and right now continue doing pre-market highs and trying to reach this 11,620 that was this region. And I think we are quite bullish, but I don't trust this move up because the news today is not as important as you may think. ISM manufacturing PMI and job openings are coming up at 10, and I think right now at 8 in the morning we are quite extended to the long side, and all traders, investors are waiting for tomorrow 2 p.m. FOMC interest rate decision. So usually these kind of moves that push the market up pre-market and are this extended usually turn out to be a bull trap or something like that. That's my opinion, and we could see a squeeze to 11,700. Don't get me wrong, but I don't think this move can be supported by today price action and news. So we'll see. This is current Nasdaq, and the dollar is actually quite strong. It's actually holding strong. If we change to the 2-hour, we can see that is more or less relatively strong. We saw this market consolidation at 110, and we are now rejecting 112 is this area, and right now pulling back again to below 111, and we might see a strong pullback for the final move to 109. I think the strong dollar is bad for the economy. We need dollar to push back quite a lot still. If we change to the daily, we can see that we are weakening, but it's quite strong in comparison to the trend that we are seeing throughout this year. So 112 looks equilibrium, but we don't want to see the dollar coming up at the same time that the stock market it's also coming up. So be careful, because this correlation is usually inverse, and that could cause traps in the market if dollar keeps pushing higher. So right now it's in a trend down, so we are more or less bullish in the stock market, but be careful. Continue watching the dollar. Yields 2-year and 10-year are pulling back still. We saw a bounce on Thursday, Friday, but right now more or less still waiting, consolidating here. The 2-year and the 10-year also pulling back. They are putting flat tops and trying to push lower pivots or lower lows. And we should see interest rates are coming up tomorrow, so this will move for sure depending on the expectations from FOMC. If we check this 2-year with the SPI, we can see that the correlation is super clear. Once the market, the yields start pushing, the market usually goes down, and vice versa. If we check the weekly, it's even more brutal. So the moment the yields start pushing, market usually feels the pain, and this is what we are seeing right now. So watch out for this 2-year and 10-year pulling back. Watch out the yields. Also, bonds, treasury bonds continue lowering. This is quite important correlation with yields and the dollar, and for sure are waiting for FOMC interest decision. So if we check this correlation, if we check the high yield corporate bonds, yesterday we actually saw a retracement. And if we check for the SPI, we can see that in August, in summer, market did a new high, but bonds, high yield corporate bonds did not do a higher high. So back then we saw a strong pullback to the downside in the overall market for new lows. And right now we are seeing weakness in the corporate bonds. So watch out, because usually treasury bonds and high yield corporate bonds are leading indicators, and this kind of divergences can lead to divergences and retracements in advance of the stock market. So watch out, and maybe early warning signs are starting to appear in the high yield corporate bonds in the bond markets. Trust bonds market more. A lot of people just ignore the bonds market, and this is super important in this situation because they can give you an edge in the long term. So watch out, yields and bonds correlate with the market and the dollar, because that way you can predict and see early signs of weakness or strength. Watch out for those. Stocks. So Apple pushed super strong but dropped yesterday. We still have this equilibrium, this doji in the 200 EMA pink line. Microsoft is in the middle of the range, waiting for news, in the middle of this pullback. Amazon, it's also coming up more or less in equilibrium in the lows, 102 right now, still holding the price action above this pivot from May, 101. Tesla, chop every day. It's quite chop in the middle of nowhere in the daily. So still a lot of the stock market is waiting for news. We got Uber earnings this morning, right now 11%, and those were quite good. Loss in EPS, but they beat revenue, and they beat analyst estimates for revenue, and they are claiming a surge in bookings. So I think demand is picking up for Uber, and I think they are seeing quite an increase on revenue this quarter. So consumer discretionary is picking up again. We are also waiting for AMD earnings, but these are after market close. So right now AMD is 2% in the green. So maybe some bullishness before earnings after market close. We have support on the daily, but I don't think we have enough edge on the technical analysis to know the trend, possible trend. I would like to raise XLY, consumer discretionary. We are seeing the market recovery. We are seeing a strong bounce of the lows for the Nasdaq and for the S&Ps. But if we check consumer discretionary, we usually want to see a strong push. If we check the weekly, we want to see these kind of moves that we got in the past. These moves, strong move that consumer discretionary is pushing the market. We want consumers to be supporting the economy and also the stock market going up. But what we are seeing, if we check one of the ratios that I usually share with you, XLY versus XLP, consumer discretionary versus staples, we are in the lows in the ratio. We need to see XLY strength. Ratio should be green. Right now is 1%, but it's pulling back from this double top, this range of resistance. And this ratio being red means that these rallies, these recoveries are defensive. I think people, big investors, big money is not trusting the economy yet. So they are putting money flow in other kind of assets. So be careful, because if we check XLY versus PI, we can see that usually when we trend big in the upside for the S&Ps, we want consumer discretionary also backing up our move. If we start seeing consumer discretionary chopping around, be careful, because maybe strong pullbacks are coming. And right now we are coming off, we are pulling back from, the tops. And if we see XLY and these kind of ratios, defensive sectors not going up with the market, be careful, because maybe pain is coming. Watch out for these leading indicators and early warnings, early signs of maybe weakness, because this kind of moves in the Nasdaq might enter in critical areas, might catch you off guard, and bull traps can be happening in this resistance. NQ is definitely behind. If we check the dailies for NQ, Nasdaq, and S&Ps, we can see that for S&Ps, we already broke this pivot to the upside, and we are entering the big resistance, 3,900 area, still pushing, but Nasdaq is falling behind due to earnings, also high interest yields that impact a lot higher on tech than in other kind of stocks and companies. So NQ definitely behind. Be careful with the moves. We need to see S&P's continuation before maybe Nasdaq continuing to going for the break of this pivot at last week high. If S&P's make a new low, if we check the futures, this support, if S&P's break this low, be careful, because shorts will jump in, market structure change. We are hoping to continue this trend, but if this low breaks, be careful, watch out for weakness. Market structure bearishness is you have to check those kind of changes, because they come very fast in these kind of markets. And overall, I think markets are quite bullish. I think it's super clear to see the trend, but this big resistance in NQ and in ES, seeing the divergences in other sectors, defensive sectors, and being super near tomorrow FOMC interest decision, makes me think that today maybe we can have another sideways range day and volatility in the range, because I don't think big money will be positioned themselves in a tricky situation, a tricky position. So they will just wait unless something big happens. That might be ISM manufacturing at 10, 30 minutes after the open, or job openings. But I don't think if we see good numbers from PMI lowering manufacturing and lowering openings or more quits, I don't think these are key indicators that could impact a lot to the market volatility, and I don't think we are going to see big moves. Tomorrow, employment change and Fed interest rate decisions, those are huge. Thursday, we continue with unemployment, and Friday, also non-farm payrolls. Labor market is super key. We need to see the non-farm payrolls, the labor market weakening. We should see more pullback on these kind of data, more lowering before turning 100% bullish. We are super near resistance, and Friday non-farm payrolls will dictate the action for sure at the end of the week. We will see the US economy, labor market weakening. I hope so. We are in the low 3% for unemployment, and that's quite a strong labor market, and Feds need to see progress for that. We need to see unemployment going up for Fed to start pivoting and maybe cutting interest rates. So for sure, I think tomorrow we'll see 75%. If that happens, 10-year and 2-year will continue climbing, and watch out for that. Be careful today. This week is super complicated, super tricky. Don't put yourself in a bad situation, FOMOing into a move that maybe is manipulated, because I don't think people will put a lot of money in the market until tomorrow. So watch the volume, watch dollar and yields for maybe some kind of trend appearing, but don't expect big moves ahead of tomorrow. Big news is tomorrow, and I think that should be our focus. So that's all. Thank you for your time. If you have any questions, please comment down below and I will try to respond to you. If you found this video useful, please remember to click the like button and subscribe to receive notifications when I upload new videos. Remember, I upload new videos every single day for market forecast, market updates, and market recap. I appreciate your time and see you in a couple of hours with the market update. And at 10, manufacturing PMI, watch out for that. So stay safe, everyone. Be disciplined, risk management, and see you in the market update.